Welcome to the deep dive. We're tackling a big question today. What happens to stock markets if the U.S. attacks Iran?
Right. We've looked at the sources, and the immediate theme is, well, uncertainty driving market moves.
Okay, so let's cut to it. Global panic first.
Absolutely. Within hours, you'd likely see sharp drops in indices like the S&P 500. Money flees equities,
Fleas where? What are the safe bets?
usually gold, U.S. Treasuries, the dollar. Maybe even Bitcoin gets a short-term bump, surprisingly. People look for assets seen as, uncorrelated.
Got it. And the huge factor has to be oil, right?
Definitely. Iran's position near the Strait of Hormuz is critical. Something like 30% of seaborne oil passes through.
So a conflict there means?
Oil prices could easily spike past $100 a barrel. That's bad news for airlines, logistics, autos, basically anything needing cheap transport.
But good news for some.
Oil producers, energy ETFs, they'd likely see a boost. And defense stocks, like your Lockheeds and Raytheons, often rise on increased tensions.
So it creates winners and losers almost instantly. What about overall market stability?
Expect volatility to surge. The VIX, the fear index, would jump. That means choppy, unstable markets, probably a short-term correction.
Like we saw briefly in early 2020.
Exactly, that kind of pattern. A sharp shock, sector rotation, then markets often try to find their footing, assuming things don't escalate further.
So the key takeaway for you listening, geopolitics triggers immediate fear and reshuffles the deck in markets.
Right, and it really makes you think, how do these sudden shocks affect your longer-term view when tensions are high? Something to consider.